TheoTrade. Here we
Good
go, Brandon.
morning.
There's a little bit more of the Good Morning Vietnam, the Robin Williams homage there. But hey, everybody, it's Friday. We made it through this weird kind of choppy week. 2 days on, 1 day off, 2 days back on, and it's a triple witching Friday. It's going to be a big day today, everybody. Glad to have you here. Brandon, how are you doing this morning?
Ah, man, I'm doing well. We're trying to think of like titles, and I was like, Kathleen Turner Overdrive for you high fidelity fans out there. Sonic Death Monkey, Quad Witch is a. We went tech takes. I mean, you inspired me, Blake, with your video last night. Tech tanks and the flight to safety is on.
Yeah, my video yesterday, I know how many times we talked about the pullback, technology tanking and the reversal.
Right.
But it wasn't just that we saw a crack in the tech. It was that Nvidia slipped and that we truly saw a rush of capital into those areas on the same day. It seemed to be that finally this is what I expect. Cause and effect. And the ES is flat, but it was the tech that fell while the rest of the market kind of was neutral. And Nvidia, that was a big deal. I mean, how can we not call that a big deal? It's the biggest single day Nvidia's had, and it netted out negative.
Yeah. It wasn't quite as extreme as we saw back on the 8th of March. I remember Don. I mean, look, I mean, Don says he's not a technician. We're talking technical analysis today, but by golly, he uses technical analysis. And he was talking about option, it was implied volatility, looking at the chart, everything together. And right off the bat, you saw things materially change in NVIDIA from an options perspective. And it was very similar yesterday in NVIDIA, where we gapped higher, we sold off in candle terms. This is the bearish bell hold.
Yeah,
Okay. Like when you want to hold up your pants, right? In this case, it's in reverse. um, this is a belt hold pattern, the high around 140. That is an area of resistance. We break this range. We're really looking for this thing to maybe roll back a fair bit here. And who knows how much? I mean, this is a very extreme position for the market.
well, and here's the other thing. Do you think, and again, we're going to get into some technicals, a little more focus on the technicals today, but do you think that kind of move, and this is for everybody to respond to, when we see that kind of move, that size of a move, but now it is more accessible. So we're not talking about just an institution hanging on to or liquidating it, when it
Mhm.
was a $1,200 stock. We're not talking about that we can see the liquidity on a $130 stock. Could we see some extra volume, some extra rollover because it's more accessible, therefore it's distributed more to smaller pieces, or we can take little pieces out. I don't have to sell one share for 100 or 100 shares, but I can sell 200 shares and not be getting rid of more than 20%. But that could be the rollover. That could be the acceleration through there.
Yeah, I mean, Don was talking about this right here. We were kind of looking at it intraday. So every day we're running a chat throughout the course of the trading day. And here Don we're like looking at this in real time and just kind of pointing out the fact that this move from like 140 to 136, this is a very big company, billions of shares. This was $100 billion hit to Nvidia literally within minutes, about 20 minutes. I
Yeah.
mean, this is the size that we're talking about in terms of Nvidia, Apple, and these types of companies. Is that these are not small moves. I mean, these are large moves that are occurring in these stocks. Again, and we saw some pretty much some breadth of selling across the technology space. Your monsters of tech, your big cap names, Meta. Again, we're just kind of hanging out here. Is it going to start to spread to your Googles, your Metas? Amazon, was up yesterday again, but it was focused on Nvidia and Apple. Those were the hot ones. That's where the gamma squeeze is, right? That's where
Yeah.
the market's been squeezing higher. And again, it doesn't necessarily mean that the market's for sure going to go down, that these stocks are going to for sure decline. But what technical analysis helps you do is really helps you kind of isolate and understand, hey, this is the psychology of what's going. And yesterday it was not good. And we're going in today with a very big option expiration where a lot of notional value is going to come off the books. And this may allow for some of that gamma squeeze that's been driving these stocks higher to start to come off and relax backwards in terms of the price. But
Yeah. You know,
we're
I,
mining the future for the present right now, all these companies.
Yeah, and I was going to say the one thing I like about that phrase, the mining the future for the present, is the market is always forward looking. It's trying to look in and saying this is what I think could happen or might happen, but it's done by looking at the things. I've always liked the analogy that fundamental traders go to the grocery store and they look at all the ingredients on the box, right? Saying
Yeah.
what's in here. While the technical traders are sitting there at the checkout and saying, what are the fit people buying? If you're healthy and strong and look good, you know, I don't have to go and see what you're eating. I don't even have to look at the ingredients on the box. They're going to say that group of people that are extra fit and healthy, what are they putting on their conveyor belt?
Yeah.
And so they're just at the checkout saying, show me what they're buying, and I'm going to determine what are the good items.
Yeah. And so I'm gonna put down the Lucky Charms or the
Well,
Fruit
let's
Loops,
not
right?
let's
I'm gonna
not
put
go
down the
extreme
Fruit Loops
here.
box of cereal, and I'm gonna buy the Fruit Loops favored protein drink. Have you seen that? It's pretty nasty
Right?
looking stuff. I can't
Yeah,
imagine it's gonna be good.
it
But
tastes
the
like
point
the
is, yes, I
the
mean it's a
dregs
matter of,
under the bowl.
yeah. I mean, at the end of the day, I mean, technical analysis, I mean, a lot of fundamental assumptions of the market, efficient mark hypothesis, random walk, etc. Everything supposedly we're going towards optimal ends. The reality is what we're seeing right now in terms of optimal ends with Nvidia, and for example, Dell. I mean, it's on my bear list here, but I mean, look at Dell this past week. I called out a number of bullish trades in Dell over the last week, but and we got a nice pop here, but fundamentally the stock broke last week technically and fundamentally. Yes, we're getting a squeeze here just a little bit, but man, you look at Dell's earnings. This company has gone from down here at around $40 to over 160, 180, and yet the earnings expectations are relatively tame. The revenue growth expectations are fairly low. And so all of a sudden, how does this jive? The great thing about technical analysis, it doesn't need to go to an optimal end. You can account for irrational exuberance, like we're seeing in companies like Dell right now. And we look at the weekly, but you look at the daily, we're starting to see a pretty heavy-handed selling yesterday. We may roll back to 128, in fact, break 128 and put in a lower high, and the trend changing to the downside. But the great thing about technical analysis, you don't have to assume that everything's rational. You can trade what you see to some extent. And right now, we're seeing in Dell is that yes, we got a little bit of a squeeze yesterday with the gamma squeeze, but we're starting to see that bearish top being put in yesterday, and potentially a lower high in Dell.
You know, and
That
and I like gaps. People think that gaps are going to always fill. Gaps are a story in them of themselves, and I think, like you're saying, that gamma squeeze pushing up, this is likely a lower high, and we're going to see in minutes whether or not this is going to
yeah.
continue lower. And we could get into all the nitty gritty saying, should it be up there? And we need to remember that Dell isn't just selling laptops to college kids. It is a big company that sells a ton B2B. And
Yeah.
but in the
And they're
end,
central in the AI space as well.
yeah, and they have the AI crossover, and then they have the draw and the lift from the NVIDIA stuff and the AI. But in the end, do you need to know any of that? I think you get a bias from it, but I think you can read this chart and everybody that can see that gap and the lower high potential has the opportunity to read this the way that.
Yeah. I mean, did you know that their margins were a little bit lower on their AI stuff they're selling, right? Their mainframe type things. No, you didn't have to know that because why? This stock gapped, right? We'll talk about a few assumptions and technical analysis here in a second, but the reality is this week is we're mining the future for the present, and you can only do that to an extent. And when you start to see price action like this, again, this is a profit taking type candle, from a, and again, you may decide to sell on follow through, whatever your signal is or strategy is, but this is a big deal here. And look, we're kind of, we look at other pricing technical analysis. Oops, wrong one. What's to the big one? But if we look at, for example, the CME FedWatch tool, I mean, right now we've had several Fed heads speak this week, and right now we are pricing in 2 rate cuts by the end of the year. Blake, did you hear anyone say that this week
I
or
I mean
last?
I saw it, but I didn't see it.
right? Like,
I saw the data, I saw the chart here, but I did not see what I would say is any indication of a cut.
right. And in fact, it was probably the opposite, right? I'm
Yeah,
like, and
even
so the
more
point is
hawkish.
that the market's pricing in 2 rate cuts by the end of the year at about a 65% probability. The Fed saying, no, we're not going to cut this year, maybe one time. I think that might be the dot plot, but inflation is probably, again, we're kind of unsettled here as oil prices are going higher. But again, recognize that the market's not always trading towards optimal ends, but it doesn't matter, right? With technical analysis, we can assume we can be okay with that. We can be okay with excess. We can trade the excess. But again, when do you decide from a technical analysis basis that, hey, it might be time to take profits? And again, one of the things that I like to use from a technical analysis perspective is volatility. And you look at the VIX rising the last couple of days, and more importantly, the term structure of volatility, the 3-month, 1-month VIX, intraday topping 1.2, meaning what? The 3-month VIX was 20% higher than the spot VIX. This is a time, that's a signal to take profits and to consider hedging. And it happened to dovetail with yesterday's trade in technology. And so this is kind of a time where you probably start to pull back. And this is using technical analysis to kind of come to that end, or that conclusion. So Blake, I
Yeah,
mean, what did you see yesterday beyond maybe just the selling in Nvidia and those companies that's maybe pointing towards this is a time to maybe start to temper some of those expectations?
well, it's the, I mean, you think about some of the things that Don likes or that Corey likes, and we'll get to this a little bit more in detail, but the expected move, the range levels, the key touches on the top and the bottom, we erased all the week and basically touched the weekly low on the expected move. An expected move or support levels and ranges, or like I do, the monkey bars, the distributions, all of those are technical analysis of distributions and adjusting for a lot of data, but we can calculate it based off of technical analysis. And so the
Yeah.
technical analysis looking for those moves in that expected move, we gapped above, erased all of that, and went to the center point on NVIDIA. But we saw that move down some of the other markets into their lows or near their weekly lows. I mean, what's the chance that we touch the expected move weekly low after trading it through the high and surpass it this week? I
Yeah.
mean, that's not much to ask.
Yeah. And
And I think that was a sharp reversal and not just the belt hold, but we're looking like we're going to touch it, and we're within $3 of it.
yeah. And we could readily touch that. Say again, this is a quad witching. I mean, there's a lot of stuff that a lot of potential gamma that's been driving Nvidia. I mean, look, we're above the expected move 1, 2, 3, 4, 5 weeks, and intraday 6 weeks in a row on Nvidia. I mean, think about just the probabilities. This is the one standard deviation range. We're outside that standard deviation for multiple weeks. In this case, 6 weeks in a row, we either touched or closed above the expected move. And again, this is a sign that says, hey, look back and say, wow, this is a point to really kind of start to temper some of those expectations. And we're starting to see confirmation with selling and with volume yesterday in Nvidia, which are both kind of key points to consider. And so as we kind of think about kind of our agenda today, and I'm trying to find it here, but again, like we're not necessarily aspiring towards an optimal outcome where we're going to achieve like some sort of like euphoric state, or what are you trying to say? What is it? Optimal? What is it? Socialists love it.
Oh,
What are we going
socialist,
towards? Some sort of like, again, some sort of state that
utopian. Are you talking about
everything's
a
going to be
utopian
cheery.
state?
You what?
Are you looking for the
Utopia.
word
There we go.
utopian?
Utopia. This is not a utopia, right?
Funny.
This is not the optimal
The
outcome.
socialists like utopia. I don't want
Like, what is this
utopia.
up
Don't give
here? I
me
don't know.
utopia.
I live in reality. No, and it's
uh,
killing me. No, but let's talk about this technical process from the crossroads. We're kind of hinting at a lot of stuff that we do, that we look at. And Blake, Blake, you and I, we're about the same age. We're both from Utah. We came to this kind of business, this education side about the same time,
mhm,
03, oh 04 of 2003, 2004, right?
right.
2000. So again, it's like we're kind of like this point where stuff like when you talk with people we used to work with that were older, they had to kind of draw their own charts. I
Yeah.
mean, we had Medved quote tracker, we had profit charts, we had all this stuff, technology where the technical analysis could actually be applied to a chart and you didn't have to do any work other than clicking a button and selecting an indicator. I mean, how did that, again, and we're teaching it. We're talking to thousands of people one-on-one every single day. I mean, how did that kind of change your thought process? I mean, how did that change kind of your, because I think you were licensed as well. I was licensed. We're kind of coming from
Mhm.
an advisor type business. I mean, what was your experience at this kind of crossroads where everything was just coming together?
Well, I think a lot of people worried that technology would destroy the industry because, we have, well, the charts are going to do it for you now. Now we can look at the fundamentals. Now we can do all these things. And reality, what it did is it became accessible. I mean, that's the reality became accessible. And I wish I could remember the terminology or the phrase from Atlas Shrugged, but they talk about the idea that the trader creates the market. The trader is the most important integral part of all, and it wasn't just obviously trading in as far as the stock market, but anything. The
Yeah.
person that's the intermediary, the person that creates liquidity, is so critical to the world, the economy, and the markets that we actually just made it more accessible and made it work better. And I think AI is going to do the same thing in the future too. But I believe that technical analysis and the accessibility and the charts and the technology that allowed us to do all these different things, that what it did is it created a more efficient market and one that you could rely on the technicals even more. It's kind of a self-fulfilling prophecy at some level for the technicals, but it made it more accessible, which brought in more players, brought in more volume, brought in more liquidity, and made it easier for all of us. Think about, I would say that the technicals and the charting and the things we do actually pushed us to the point where we went off the fractions to the pennies, and we got these penny wide and no commission
Yeah.
spreads because of that very thing. I think technicals were a big component of it, and I think we have to pay attention to them.
Yeah, I mean, Blake and I were involved in, and I want to throw out there, share with us the first charting package you've ever used. TC2, what was it? TC2000? Was it
GT,
Med
yeah.
Track, Profit Charts, Thinkorswim charts? What was the first charting package you used to start to look at charts? We want to see how we want to date people here, but
Well, yeah, we do.
we were
We
kind
want to
of in
know
an
how old
interesting
you are.
position, and on the option side, you had Don, you had Jeff Bierman. I mean, it was one of those situations where we're kind of in this page where how many people came through the doors on our education side and Thinkorswim, and then we got married together in '06. We've touched a lot of people, Blake,
Yeah, we reached out and touched
in a
someone.
good
Well,
way.
that does that just if we reached out and touched someone? TC 2000 says Brian. Toss, a lot of Toss is their first introduction.
Yeah.
Um, Profit charts, yeah, and yeah, we did a lot of work with them too. So
Now, why are we bringing this up here? I'm
hate
going to just show this
paper.
really quick. We got a little bundle here. So we used to create courses for TD Ameritrade and earlier Thinkorswim days, even earlier than that. And man, we would sell them for a lot of money. And then we'd have a lawyer say, "Well, don't put that in there. Why? Like this is the secret sauce. You're telling me I can't put the secret sauce in." Guess what? At TD Ameritrade, we've created many, many, many more courses than we ever did back in the TD days, and they're here. And we're not selling it for $25,000. We don't do that here. We sell stuff for a manageable amount. But the idea is that you have access to all these classes using all of this history. Again, talking to thousands of individual traders, presenting for many years, and training probably a lot of the people out there you probably see on YouTube. But the idea is that it's all here, and it has an amazing offer. And I could click on that for you. I think it's $497. But again, there's many classes on many different types of analysis that we use and stuff that we've been ferreting away for years. And we had an opportunity to share it through TheoTrade, and now you have access to it as well. So just wanted to throw this out there for those that are looking for something. But again, this is you got Don here talking technicals. But Don uses technical analysis. He doesn't want to bill it at that, but he does his expected move stuff.
Yeah,
But we got
expected
a
move
lot of
is
stuff here for
technical
you to work from.
analysis.
What?
Yeah, technical expected move is technical analysis. It's
Right.
just looking at option data to gather the technical analysis portion. It's math.
So you
So
have a chance here to kind of learn from us and using. And there's some assumptions here in technical analysis. Number one, the market discounts everything. Price moves and trends, price actions repetitive. And so again, I mean, I'm not discounting the fundamental analysis side of it, but the fundamental analysis side of it sits back a lot of times in this position and is stymied because we're not doing what's rational or optimal. Guess what? When you're talking trends and repetitive price action, we're trading what the chart is giving us. And again, I got what are other form whether it's assume, presume, take, suppose, feign, adopt, usurp. And what I'm saying right now, let's usurp traditional type of analysis and focus on trends and other price action type tenets to help us. And that's exactly what these courses are designed to do, that we're bringing to you. Again, that you can access right now if you follow that link. But anyway,
yeah, and since we're talking about all that and usurping, since we're going to usurp, now since we're going to do this, we've got just a few minutes left. And I know we're going to jump to this. I want to make sure that we can throw out some of the symbols we've talked about, and I'm not even going to dig into this. Mine was GLD and SCCO, and I know yours is FCX.
that's for
Uh, and
Comcast, the
I'm
dividend payer.
Yeah, these are the ones that we're looking to continue to go higher. And you'll notice for me, it's uh, commodities and utilities still on the table. I was going to look at Tractor Supply, that big sell-off was big enough to look at a little bit deeper, but I would like to see, while we're looking at maybe a couple of yours, let's get some symbols in here. What would you, as our watchers, the watchers, uh, we are the ones that watch. So if you would put some of the symbols in that you want to talk about, let's jump to that. We've only got about 12 minutes before Don's going to come in here, but let's go ahead and go through some of yours. Let's do some technical analysis together. And we can do this on the fly, get those symbols typed in, put it into the chat, and you can put it in any of the chat and look at those.
Yeah. So one came up. So Trader DDP said, "What technical analysis works today in today's markets?" Here's the deal. I mean, so there's a couple things, right? The idea that number one, trends, and the fact is, Nvidia. I mean, Nvidia's provided a very nice trend. So if you can't follow trends, again, this has been a principle. Trend breakouts. We're seeing kind of a bearish engulfing pattern here, bearish bell hole pattern, but trends is where you begin, right? Relative strength. We can see that technology is up 15, 16% in the last week, right? Identifying areas of strength. I know, Blake, you're talking from a little bit longer term perspective, but focused on relative strength as an area or a signal. Tell us a little bit about that one there, as far as
Yeah, so
from a
as simple as the rotation that I use is I a lot of times use a 3-month relative strength and rotation in and out of different aspects. And so I'm looking for the strongest of the strong versus the weakest of the weak. And the 3 months pattern is, even though that seems like forever, I'm not going to trade for 3 months because then the trend doesn't even start for 6 months. No,
right.
it's actually the shifts and the changes that happen in the interim can create these patterns that run for not just a matter of a couple of days, but weeks, months, and years, and we can catch those early. But yeah, relative strength is absolutely a good indicator that I like to use, and I like to use acceleration, kind of the momentum behind it, whether you want to use a MACD or my parabolic star and Bollinger Band combo for a breakout. Those look for acceleration, so relative strength and accelerations. And
And that's the thing is
Tim
we
actually
have
says
we
algo
have
trades on that too.
we have entire 3-hour classes on all those methods. And for example, something I look at every Friday in my hour session is this right here, because it's on top down analysis. You had a signal back here March 4th to March 8th to buy utilities and sell the S&P. That just reversed 2 weeks ago. So you sell XL, you buy the S&P 500, but again, you look at what happened from March 8th, for example. And again, this is a boring space, but from March 8th, this week right here, until what, 2 weeks ago. So what do? You sell the S&P, you buy XLU there, you sell XLU, you buy in the S&P there. And again, it's just a signal. And again, you had positive performance during that period. Doesn't always work that way. But let's take a look at Pfizer, PFE. So I know I kind of have a saying, don't do drugs. So I do avoid drug stocks generally. Okay. But from a technical perspective, I mean, Blake, I mean, how would you read the trend right now in Pfizer?
Well, and this goes back to what I've been highlighting this week is that you either go Dow theory and say whatever the last trend is until you have a new trend, which I would argue has to be up, but I also do the expansion. And when I see expansion, we cleared out both sides and came back centered. And so I'd call this a consolidation that is probably fading to the downside. And because when I say not consolidation, I'm saying consolidation after the expansion, because we pulled back into the center. We're pulled back to old support after breaking the trend. It is not a new trend yet, but we did break out with the expansion. And then we, right through there from 30 down to 26-ish. And so we saw that expansion breakout and we're just bouncing up. And I think it's establishing a downtrend, and I'm looking for 26. I'm looking for 26,
Yeah.
25, 50, somewhere in there.
I think when we kind of got this high here, we failed to achieve a higher high. We broke the low in between.
Yep.
We're kind of bouncing, retesting it. But yeah, this is probably looking for this to go back to 26. And this is where you got to make a decision from a system perspective. Are you trying to fade the support down here, which is reasonable, but may break, right? We've kind of tested it a couple of times in the past. So again, this might be an area now, Blake, if we got to 26, this is where strategy comes in. I know you like to sell premium a lot at kind of a volatility picks up. Would you sell a put down here if we test 26 again in
Yeah.
Pfizer?
Yeah. And see, I have one of my favorites that no one talks about is a covered short put or a covered short stock,
Yeah.
which no one talks about it. And that's all it is instead of buying the stock and selling a call to collect premium, is sell the stock or short the stock or buy a long put for multiple weeks or months, and then sell the put when the next put when you hit the low, collect that extra premium against it. It's just the flip. It's just the inversion of the covered call, which is just as safe.
Yeah. In fact, we have so if you want to replace the stock with a long put, we have a class on using long puts as a replacement, stock replacement strategy. So there's lots of ways you can skin this and sell premium against, as you mentioned, or buy put or buy protect. So, but looking at Pfizer right now, we're kind of sitting in the middle from a risk reward perspective. Just look for those extremes to be hit. Another one is DBC's coming through from Larry. Commodities. So what is the principal commodity reflect this? It's oil, right? Oil has the biggest weighting in DBC, and oil right now. I mean, Blake, what's your take on oil at this moment?
That was so it's the same game, opposite direction. We went into consolidation, expanded out from there, so cleared the highs and the lows, and we just, I think that it's giving you the lift in oil that is likely to continue the lift here. And but similar idea, you failed at the top, but the difference is that it went back through its old support. It's not rejecting it like Pfizer did.
Right. So we're seeing this kind of trajectory of higher highs, higher low, or a high and a low, just in the upward direction, which we may retest 24 again. Now, my thought process again, we're kind of throwing in other commodities, more of a general commodity index. If you like oil, again, that's probably has the largest weighting in DBC. You could look at a product like USO, which just cleared the highs, looking at this thing going back to 83. And when you look at the product depth, why is this significant? /CL. This is where you got to know your product a little bit. Again, one of the important points using charts, you also have to understand the product you're trading. And what you'll see right now is that oil is in backwardation. So what's happening with USO, they're rolling at a credit. And so at this stage, USO has a chance to actually outperform CL because of the backwardation. They're rolling at a lower price, selling at a higher price, buying at a lower price, selling here, and buying there. And so again, USO is one I've been kind of bullish on last month because of the backwardation, and USO may perform. So again, if you like DBC, you might like USO because it's principally oil and it's benefiting from the backwardation market on the positive rolls. Again, looking for this thing testing 83.50 on USO. You might get a little pullback here, but again, we're just kind of broke out this week. Diminished volume, but again, 83 is kind of my target for USO.
We'll throw an
Let's take another one
XOM
here.
while we're still there. While we're
The
still
what?
oil talk. Throw an XOM while we're talking about oil, since
Yeah.
that's
So
one that one of the
energy hasn't
chat questions.
exactly participated
Hmm.
to the same extent. So do you think
Yeah.
Exxon's going to play catch up here?
No, that's what I find is interesting, that even though oil's catching up, this is a commodity play. It's a currency play. I was talking to, I'm a car guy, and I was talking to my car guy, which the guy I buy a lot of my cars from, and we were talking about different things. And I said, look, what's going on is that we have all the commodities up, and I was talking to him about this yesterday. All commodities are up, and the dollar was up. And we talked about this in the session yesterday as well. What does that mean? It doesn't mean that something's broken. It just means that the dollar is the cleanest dirty shirt in the hamper. It's the 90-pound weakling versus the 60-pound weakling. It's not that that's strong. And I think we're seeing that with the fact that oil companies are not gaining on the spike in oil. It's just that oil prices are gone back up, and it doesn't mean the economy's doing well. It doesn't mean there's a lot of demand. It doesn't mean that they're going to make their margins. And I think that's why we saw the dollar up with commodities. And I just think the trend is, like you just talked about, Brandon, the trend's your friend, and the trend is down, absolutely. And it's still got a little ways to go before it breaks there. So I would not be ready to go bullish on XOM.
Yeah.
I'd be looking to fade the high.
So I look at option activity rig. Yesterday I had bearish option activity. I'm looking at this thing go back to 4.5. Walnut says technical analysis is about to become obsolete because of machine program algorithms. Well, the reality is we've had machine program algorithms for a really, really long time. Now, the thing to consider on this is that so let's say you have billions of dollars to invest, right? Hundreds of $1 billion to invest. Can you do it
Okay.
in one day, Blake?
I do it no.
No. Could you put like, for example, and let's take Nvidia. This stock's gone up for a long period of time here. Now, again, is this algorithmic? Sure, right? Why not?
Mm-hmm.
But can an algorithm deploy all of its capital in 1 second? Would that be wise?
No, it moved the market so much you wouldn't be able to ever get
Right.
out for profit.
The problem
And
is, and this is what makes technical analysis so effective, even in irrational environments, is because these big money investors that are programmed by algorithms, right? It's a steady drip. They can't just move into one space or one stock at an instant, right? It will
yeah.
move the price of that stock too quickly, and they're going to get really bad pricing. It's the drip, drip, drip as they move in, and they create a gamma squeeze like Nvidia, right? The
Mhm.
dispersion trade that Don's talked about all year this year, again, has played out very well for the catapult trade, is that it is a drip, drip, drip coming in and creating gamma squeezes. And you may not know all of the back end, but can you follow a price trend? Can you see a breakout? Can you see outperformance? Yes, you can see all those things by using technical analysis methods. So it's never going to go away. It's just a function of, because why? Because rotation into a stock can't be immediate. It's over time. And that's why you have trends that develop.
Well, and keep in mind, technical analysis is observing the past, observing the trade flow, observing the volume and everything else that we talk about. And in the end, if there's algos, it's just faster than I can do, but it's still institutions.
Yeah.
It's still movement of capital, and we're doing technical analysis on what they did. You're right. The technical analysis on an intraday chart is probably going to be very, very difficult to do, because you're going to be chasing down something and it's just too fast. But the fact is, how did an algo is not something that's ethereal. It is literally someone saying, I want this math to trigger this trade.
Right. Right. It's a system programmed by a human.
A human decided what they want to have happen.
And even AI, there's still human inference, right, on an AI program. So no matter what you do, where we go, again, you cannot overcome the fact that it's money flow, right? And money cannot flow into something immediately at the level that there's funds available. And so it takes time as they work into these areas. But TD says, would you still put a Dell and CZR? Dell, yeah, is an in-out type spread, right? A vertical spread looking at 130 would be reasonable. Buying a downside put spread here. CZR, I'm not exactly bearish on CZR. For those who listen to my sessions, CZR,
Las Vegas
and this
Sands.
space, I'm trying to think, LVS. there's been a lot of bullish call option flow in the last week in these names. So I'm not one that's really wants to get bearish on these names in particular, this space in particular. Now, throw in love, that's a different scenario, right? I think this is probably going to break down Tesla's, and the rising energy price rising will help with that.
Yeah. Hey, we are actually down to the wire to the last second or two, and I know we got a lot of symbols in there. Join Brandon in his session, me in my session. I'd be glad to continue to go through the discussion of some of the symbols you want to look at. Put them in right at the beginning. For those of you in the deep currents, if you know, as far as the updates and the thing, we're going to watch to see how financials open up, and I'll post something into the chat in the main room so that we know whether it's priced well enough. It's because we got into this on the open yesterday, and so we're probably chasing a little bit unless we get a pullback today. So we might not be able to add to that one there, but we'll be looking at some other ones as we go, and some long-term in my session. Brandon, parting shots.
I think this is a day where you got to be a little careful, right? And I think there's some bearish trades setting up right now. Again, some of those areas we talked about. I think the breakout in gold was significant yesterday. We may retest prior highs on a weaker dollar, but be careful, right? If we start to sell off here, the dollar may strengthen, and these other kind of bearish trades start to kick in.
Well, here back to algos. Algos still have to deal with triple witching. They have to roll positions, close positions,
Yep.
things expire, and so a lot of things to be careful with today, because there's going to be a lot of movement of money trying to reposition, take hedge out risk, and adjust for the next week. So, all right, thanks for being here, everybody. We will see you live. Dawn's coming up here shortly.
All right, have a great one, everyone.